So this is a question 3 of May-June 20, paper 21. And it is related to admission of partners. Are you with me? Can you please read the question for me?
The statement of financial position. You have to make a capital account. Okay.
You have to make a capital account, and apart from that, you also have to make in the B part a appropriation account.
Yeah.
We'll talk about appropriation account later. First, let's go to the capital account. So you have been given the statement of financial position over here. And this have told you that the partners have admitted Eddie on 1st June 2018. Partners capital account always starts with what?
Balance brought down.
So partners capital account will start with the balance brought down, and I have 100,000 and 145,000. Are you with me? You sure you're with me?
Yeah, I'm with you.
So after the balance begin down, what will you have? New partners capital. Yeah? What is the new partners capital? Can you read this?
The new partner's capital is $40,000 asset and $50,000 cash.
So you have cash of the new partner 50,000.
Yeah.
And you have non-current assets of the new partner 40,000. That means capital is introduced in cash and kind both. Are you with me? Are you with me?
Yeah.
New profit sharing ratio is 5:3:2. You write the opening balance, you write the capital introduced. According to you, what will be the more two things that is going to come in this question?
Then will come the goodwill, na? The revaluation will come first.
Goodwill adjustments will come, revaluation will come. So they said goodwill is valued at 40,000 and goodwill will not be retained in the books. So what you have to do is you have to do two things for related to goodwill adjustment. What are the two things?
Raised and written off.
So the two things is goodwill raised and goodwill written off. When I say goodwill raised means what?
Goodwill raised is the goodwill raised. How do I explain it now? The money raised, the goodwill raised. Money no, the goodwill.
Where will we do it?
Acha, वैसे goodwill raised will come on the credit side.
Oh, so partners capital account on the credit side, I will write goodwill and it is raised amongst the old partners in old ratio. What is the old ratio? 2:3.
Yeah,
so
2:3.
40,000 is going to be distributed amongst M and B in the ratio of 2/5 and 3/5. Yeah? So what is the amount coming up to? 16 and 24,000. Yes? Are you with me?
Yeah.
Goodwill raised and goodwill is not to be shown in the books. That means you're going to write off goodwill.
Okay, that I understood.
And written off will be in the ratio of 5:3:2. That means 5/10, 3/10, and 2/10. 2/10. How much will it be? $20,000, $12,000, and $8,000. Are you with me?
Yeah.
So what did you have? You had the opening balance. You have cash introduced. You have the non-current asset introduced. You have goodwill raised, and you have goodwill written off. What else is left?
What else? Revaluation.
Revaluation of assets and liabilities. Come on. Non-current asset is revalued at 210,000. This has become how much?
This has
210,000.
yeah, so it's upward by 1 minute.
So non-current asset is valued upwards by 35,000.
Yeah,
It's
35.
a gain on revaluation and it will
Hmm.
go to partner's capital account, credit
Yeah.
side or poor. So 35,000 will be distributed in the ratio of 2:3.
Huh.
Yeah.
Yeah.
Non-current assets is revalued. So this will become 14,000 and 21,000. Are you with me?
Yeah.
Come on. Top for inventory. Can you read, please? I don't know
Uh,
in which zone are you in.
no, I'm in this zone only. Inventory at 31st May 2018 had a net realizable value of 45,000.
Hmm.
So it's going down. It went down. Asset went down.
Hmm.
By 15,000, I think. Inventory is how much? Yeah, by 15,000.
How much?
Loss.
Come on, tell me.
2:5 into 15,000.
So inventory is going down. So loss on revaluation will come on the debit side.
6,000 on the 6,000 will be for one partner and 9,000 for one. Yeah.
Come on.
You have to write, miss, the inventory going down and all.
Yeah. Either you make a revaluation account and directly transfer profit or loss, or you do it separately.
But we can, okay, fine, I understood. I don't know we are allowed to write in this
Now,
also.
provision for doubtful debts, 5% of trade receivables.
Yeah, so 2,400, 48,000 minus 2,400.
2,400 asset is going down by 2,400. It is a
Yeah.
loss on revaluation.
Yeah, it's a loss.
How much? 2,400. So
2,400.
2,400 divided by 5. So 960
Hmm.
and 1,440.
Hmm.
Either you do like this or you can make a revaluation account. You will write the gain here. You will write the loss here. You had gain of 35,000.
Yeah.
You have lost one of 15,000 and
Hmm.
one of 2,400. So your net gain on revaluation is how much? 35,000 minus 15,000 minus 2,400. So your net gain on revaluation is 17,600.
Huh.
Please check. I'm giving you time to digest it.
Okay.
You had gain on revaluation 35,000
Hmm.
for non-current assets and you had two loss on revaluation.
Yeah.
So your net gain on revaluation is 17,600, which will be distributed amongst the partners in the ratio of 2:3.
Got it.
So 2/5 will be how much? 7,040 and 3/5 will be 10,560.
So this will only come directly now revaluation mein.
You can do it separately or you can prepare a rough revaluation account
Huh.
and you can
I
transfer
want to prepare a rough revaluation account. I get very confused.
7,040 and 10,560.
Yeah.
Okay. This is
Hmm.
the profit on revaluation.
Okay.
Are you with me?
Yeah.
Then you will close the account. When you're closing the account, this is your total. Credit side is more.
Yeah, the credit side is more. So balance closed down 103040 for Miguel. For Bernard, it'll be 167,560, and for Eddie, it's 82,000.
Hmm.
Done.
Hmm. Done?
Yeah.
Okay. Now you have to prepare. The second part of the question is you have to prepare an appropriation account.
Okay.
What do you mean by an appropriation account? What comes in a profit and loss appropriation account?
The expenses towards the partners and income from partners.
Income from partners is what?
Income from partners like interest on capital and all that.
Income from partners is interest on
Interest on
loan,
drawings. My bad, I got confused.
and expense towards partners is
It's like interest on capital and all.
okay.
Salary.
And this profit for the year should be the one after interest on loan.
Huh.
Are you with me?
Yeah.
Can you read the question, please?
On 1st October 2018, the following changes in terms of partnerships were agreed by the partners. All
Stop,
cash.
stop, stop, stop. That means there is a change in the terms.
Yeah.
If there is a change in the terms, then you would prepare the appropriation account for two periods separately.
Okay.
One would be before changes,
Huh.
and one would be after
After
changes.
change.
After changes means from when to when.
From the period from where change stopped.
So change happened when?
1st October
So from 1st October 2018 to
to
31st May
31st May.
2019. So how
Yeah.
many months?
8 months.
Okay, 8 months. So before changes would be how many months?
4 months because 12 minus
4 months. That means a year started when?
31st, 1st June.
Your year started on 1st June. Are you with me?
Yeah.
Okay. So your year has started on 1st of June.
Yeah. You have to find out the profit, I think.
See, you have to prepare appropriation account.
Yeah, but you have to find out the profit because it's not given.
I don't know. I've not read it ahead.
I read. I'll tell.
Saw the marking scheme.
No, it's not.
If you have to make appropriation account, you start with profit after interest on loan.
Yeah.
And you have to prepare appropriation account for two periods separately.
Hmm.
Before changes and after changes. Are you with me?
Yeah.
Can you read this, please?
Sure. All the cash introduced by Eddie was converted to a loan at an interest rate of 6% per annum.
Hmm.
Okay.
Explain me.
Eddie, all the cash received by Eddie was converted to a loan at interest rate of 6% per annum.
So this
So
is
Eddie,
loan by the partner.
yeah,
Okay, how much is the loan by partner?
where is that given?
Read, na? It's given in the question only.
1 minute. 39,000.
Read, please.
No, wait, I'm reading this wrong. 12,000.
Read the question again.
All the cash. Oh, introduced. I'm not reading this only. Okay, 50,000, na, because that's the cash introduced.
Hmm.
So 50,000 का 12%. 6%, sorry.
How much?
50,000 का 6%.
When is this happening?
This is happening after, on 1st October के बाद.
So loan interest will be how much?
First 2,000.
Can you give me 50,000
50,000 into 6%.
into?
8 upon 12.
So how much is the loan interest?
1 second. 2,000.
So this will come where?
On the 8 months wala part.
The 8 months wala part. So you don't still know the profit for the period, right?
Yeah.
Now this, come on, read.
Okay, then it is salary given to Eddie.
How much?
12,000 per annum.
When was this decided?
After the changes.
After the changes. So salary will be given to 80 when?
After the changes.
First 4 months or last 8 months?
Last 8 months.
How much will be the salary?
So 12,000 divided into multiplied by 8 upon 12.
Okay, fine. So Eddie's salary 8,000. Less,
Hmm.
right?
Yeah.
What is this?
The profit sharing ratio was changed to 2:1 for Miguel, Bernard, and Eddie. Okay.
So what was the initial profit sharing ratio?
Miss, can you go over? I don't remember. 5:3:2.
Okay. So whatever is the residual profit for this period,
Hmm.
residual profit for this period
Yeah.
will be split in the ratio of 5:3,
5:3:2.
and residual profit for this period will be split in the ratio of
2:2:1.
2:2:1. Read now here.
The draft profit for the year end 31st May 2019 before interest on loan was 39,000. This accrued evenly throughout the year.
Accrued evenly throughout the year means that every month the same amount of profit happened.
Okay.
So your profit for the year
Hmm.
before interest on loan was how much?
39,000.
39,000.
Minus 2,000.
Accrued evenly throughout the year. That means every month we had the same amount of profit.
Yeah, so 39,000 divided by 12 karna hai.
So every month you had a profit of 3250.
Yeah, and now to find out, you have to do 3250 into 4 and 3250 into 8.
Then you will deduct loan interest.
But you deduct loan interest only for the 8 wala part, na?
Yeah, only for the 8 months.
Hmm.
Then you get the profit for the year. This is the profit before appropriation.
Okay.
Are you with me?
Yeah.
Then you will minus the salary.
Hmm.
You will get residual profit. How much?
Residual profit.
So it will be 13,000 for the first 4 period.
Yeah.
And this will become how much? 24,000
16,000.
minus 8,000. So it will be 16,000 for the 8 months.
Yeah, and then you have to share it 5:3:2 karke and 2:2:1.
Yeah. Here they've not written one column for the net divisible profit or the residual profit.
Huh.
You have to share it.
Hmm.
I'm waiting for you. Do it.
Explain
Explain two reasons why a partnership might keep separate current account and capital account.
a part separate current account and capital accounts because the
Why
capital
do you
account.
want a separate capital account?
So that you get like the proper changes in capital ka one account for that.
You keep a separate capital account so that you don't want the capital balances to change.
Okay.
You want the capital to be fixed. Why do you keep a separate capital account? Because you want the capital balance to be fixed.
Okay.
Okay. And it also helps you to calculate your interest on capital.
Okay.
Why do you keep a separate capital account? Because you want to keep
Because
capital balances fixed.
yeah,
And it helps you to calculate what?
interest on capital.
Okay, in the capital account, even if you're following a fixed capital method, you will only have the opening capital, additional capital, revaluation profit or loss.
Hmm.
You will have the goodwill adjustments and that's it.
Yeah. Okay.
Okay.
Huh.
Why do you keep a separate current account?
Because like to show the different transactions like salary, interest on drawings, interest on this, interest on that, and all that, and to find out the share of profit.
To facilitate interest on drawings. Okay. So two
Yeah.
reasons why you want a separate capital account and two reasons why you want a separate current account. Okay. So current account will have all the ongoing transactions between the partners and the firm, and it also helps you to calculate interest on drawings.
Drawings.
So with this, we complete May June 20 paper 21 partnership. Okay.